Welcome, and this is the first class of the first lesson of the first class, and we're talking here about filing requirements. Who should and who must file a tax return? Just a brief introduction to the Freedom Financial Partners learning series. When you see these classes, you'll see that these are all based on the Publication 17. References are identified. You can find a copy of the latest Publication 17 on the IRS website, or you can find out more information at freedomfinancialpartnersllc.com. The personal income tax video series is going to include the basics, which is class 1, and we're going to do lesson 1, which is filing information. It comes from chapter 1 of Publication 17. Lesson 2, which is exemptions and dependents, which comes from chapter 3, and then we back up to the filing status in lesson 3, which actually comes from chapter 2. And then we'll get into class 2, which has to do with your income, and class 3, which has to do with the deductions. So in this particular lesson, we're going to cover the history of the income tax. We're going to do an overview, very brief overview of the 1040, and then we're going to dive right into who must and who should file a tax return. This is the 1040. At the top of each 1040, you will see the tax year. We're working with tax year 2016, and that's identified clearly at the top of the form. The next section of the form is actually referred to as the label. Back in the olden days when the IRS mailed out the instructions along with your 1040, there was a label attached to the back of that, which would allow you to just simply peel the label off, put it onto your return, and if no information changed, the IRS's information was correct, you could proceed forward. The next section is the filing status. The filing status is where you indicate whether you're filing as single, married, filing jointly, married, filing separately, head of household, or a qualifying widower. The next section is for your exemptions. This is where you would list your dependents, indicate the type of dependent that they are, and if additional exemptions are required, you can attach an additional sheet. The income section allows for you to place all income, whether it's taxable or not, into the income portion for calculations. The adjusted gross income is actually calculated at the bottom of the adjustments. The adjustments are now at the bottom of page 1 of the front side of the form. So the second page is going to include your tax and credits. We're going to look at the adjustments and the deductions and the exemptions in order to determine what your taxable income will be. So here at the top of the back, line 38, you would simply bring that over from line 37, which is your adjusted gross income. And then here you would indicate whether you have a Schedule A or whether you're using a standard deduction up here in this upfront section. You would calculate your exemptions. You would subtract that to get your taxable income. Then here in this next section, 48 through 54, is where the non-refundable credits appear. This would allow you to take the amount of tax you owe down to 0, but not below 0. The next section is other taxes, and in this other taxes section, you can see where you would indicate your self-employment tax, any unreported Social Security or Medicare, or any additional taxes, including the individual responsibility payment for lack of healthcare coverage. The next section has to do with payments. In addition to payments, you will see here what we call refundable credits, which are credits which act as if they are payments. And this section would sum to the amount of payments you have in your tax account for this year. The next section is where you would identify your refund, and you can see here that there is a place right on the form to indicate the routing and account number for direct deposit. The next section, in the event that you did not pay enough in throughout the year and you actually owe taxes, you would indicate that here. There's a section for third-party designee where if your return is prepared by someone that you would like the IRS to be able to discuss things with, you can indicate the information into this section. And then there's the place for signature as well as the paid preparer down at the bottom. Now we're going to get into the heart of the lesson, which is who must file and who should file. You must file a tax return if you are a U.S. citizen or a U.S. resident or a resident of Puerto Rico, and you meet the filing requirements that apply to you. The filing requirements for most taxpayers are determined by three main factors. That's your gross income, your filing status, and your age. Income that is subject to tax includes the following: any wages, salaries, bonuses, or commission, certain types of fringe benefits, tips, unemployment compensation, interest and dividends, refund of state and local taxes may be included, any alimony, income tax from self-employment, hobby income, gains from the sale of property, pensions and annuities, IRA distributions, any taxable portion of Social Security or retirement railroad benefits, jury duty pay, gambling winnings, scholarships and fellowships, some of those are taxable, debt cancellation, as well as court awards. Your filing requirements are determined by your filing status and your age. And by filing requirements, I mean how much money you make. You would need to know your filing status and your age and how much money in order to determine whether or not you're going to need to file. So here you can see this is Table 1.1 from the publication 17. If your filing status is single and you are under the age of 65, then if your gross income is at least $10,350, you will be required to pay. The dollar amounts that are listed in the far right column are actually the sum of personal exemptions and standard deductions based on the various age levels and filing statuses. So here's an example. Bill was not married at the end of 2016 and he lived alone. Both Bill's marital status and filing status are single. On December 31st, he was 45, so he chooses under age 65 as his age. In 2016, he had a part-time job as a carpenter and he received wages of $10,000. He also made $350 from his snow plowing business. Bill does not have to file a return, true or false. Well, you can see here that Bill actually earned $10,350, and because his gross income was at least $10,350, Bill must file a return, and it is false. Frank and Linda were married and living together at the end of 2016. Frank turned 65 on January 1st, and Linda was 69 at the end of 2016. They are both retired. Frank receives a pension of 17, and they receive $3,500 in interest and dividends. Their marital status is married living with spouse, and they file married filing a joint return as their filing status. They have no other income. They do not have to file a return, true or false. And here it is true. Because Frank turned 65 on January 1st, he's considered to be 65 at the end of 2016. Both spouses would be considered 65 or older, and so the total amount of pension and dividends and interest is $21,500, and they would not need to file a return because their gross income is less than $23,200. Peter is married but has not lived with his wife for 2 years. Their child lives with Peter. Peter was 38 in 2016 and he had a gross income of $12,500. Peter's marital status is married with a child living apart, and his filing status would be head of household. Peter does not have to file a return. Again, looking at the information from Table 1.1, we're going to find that this is true. The gross income limit for his age and filing status would be $13,350. So Peter does not need to file a return. However, if Peter had had to use the filing status of married filing separate, he would have to file a return because in that instance, his gross income would be more than the $4,050 that would be the level for that particular filing status. Filing requirements for dependents are based on gross income, earned income, unearned income, marital status, age, and whether or not the person happens to be blind. So in the case of the filing requirements for dependents, you see this new table. It's Table 1.2. It's from the publication 17. And if you are a single non-married dependent and you are either age 65 or older or blind, you would use the lower portion where it says yes. And if you are not, you would use the upper portion which says no. We're going to go through the numbers from the no section. So you would have to file a return if any of the following apply. If your unearned income is more than $1,050, or your income, earned income, is more than $6,300, or your gross income is the larger of $1,050 or your earned income up to $5,950 plus $350. So we're going to run a couple of examples here. Married dependents, if you are not 65 or blind, the numbers are the same, but your gross income needs to only be at least $5 and your spouse can file a separate return and itemizes. In that instance, if your spouse is filing a separate return and itemizing, you would be required to file a return. So looking at dependents example 1, Gloria was 16 years old and single in 2016 because she can be claimed by a dependent by her parents. In 2016, Gloria received $1,200 in interest from a bank account. This was her only income. Would Gloria need to file a return? In this instance, the answer would be yes, because her unearned income is over $1,050. So problem number 2, Gloria's sister Leslie is 15 and single in 2016. She can be claimed as a dependent by her parents. She earned $2,500 from her job and $225 in interest. Does Leslie have to file a return? And the answer here is no. Leslie's unearned income of $225 is not more than the $1,050, and her earned income of $2,500 is not more than $6,300. And her gross income, $2,725, is not more than the larger of the $1,050 or the $2,725. Her earned income is of $2,500 plus $225. So Leslie does not need to file a return. There are other situations that you may need to file a return even if your earning levels do not require it based on Table 1 and Table 2. Referring here to Table 3, again from the publication 17, Chapter 1, other situations when you must file a 2016 return. You must file a return if any of the 5 following conditions apply. The first being if you owe any special taxes. Some of the special taxes could include the alternative minimum tax, or any additional tax on qualifying IRA plans, household employment taxes, Social Security or Medicare tax on tips that you didn't report to your employer, recapture of first-time homebuyer credit, any write-in taxes, including uncollected Social Security and Medicare, any recapture taxes. The second thing is if you or your spouse, if you're filing jointly, receive a healthcare savings account, an Archer MSA, or Medicare Advantage distribution. In that case, you would also need to file a return, or if you had net earnings from self-employment of at least $400. Then if you have wages of $108.28 or more from a church or qualified church-controlled organization, the reason for this $108.28 is the same as the $400. It's because they're going to be looking at self-employment, and if you are working for a church, it would be subtracting the Social Security and Medicare taxes amount. And so in that case, that's where you get the $108.28. If you received advance payments of the premium tax credit for either you, your spouse, or any of your dependents, if they're enrolled in coverage through the marketplace, you would be required to file a tax return. So of all of the things that are listed in Table 1.3, the ones that are going to be most common is net earnings from self-employment of at least $400 or advance payments of the premium tax credit. Other situations when you must file a return. So we're going to look at a couple of examples. Mary was not married and was 69 in 2016. She received taxable pension benefits in the amount of $9,100 and $900 in interest and dividends. She also makes some extra money cleaning houses. In 2016, her net income from house cleaning was $750. Mary does not have to file a return. True or false? This is going to be true. That she does have to file a return. Mary does have to file a return, true, because even though her gross income is below the amount on the form, on the table, her self-employment is at least $400. So that is going to be where she is required to file a tax return. It would be from the house cleaning income. However, if you don't have to file a return, there are instances when you should file a return. Even if you do not have to file, you may want to file if you had any income tax withheld, or if you qualify for the earned income credit, or additional child tax credit or any other refundable credits. In that instance, you would want to file a return. There are 3 different forms that you can use to report your taxes. They're the 1040EZ, 1040A, and the 1040. We use predominantly the 1040 in tax preparation for professionals. In the event that you are single, married filing jointly, have no dependents, and you have less than $100,000 and just certain types of income and credits, you might qualify for the 1040EZ. The 1040A would allow you to file for all filing status. Again, your income must be less than $1,000, and it does not include all sources of income. So the 1040 can be used by everyone. You just have a few more lines to work with than if you were to choose one of the more abbreviated forms. The abbreviated forms would not allow for certain types of income. We do need a tax ID number in order to file. These are Social Security numbers, I-10s, which are individual tax ID numbers, A-10s, which are adoption tax ID numbers. The I-10s, if you may find your I-10 has expired, and if that is the case, you can certainly work with a tax professional to determine what steps you need to take in order to be able to file your tax return this year. Also, we round off to closest dollar amount. If you have a 49 cents or less, you round down, and if you have 50 cents or more, you round up. There is a difference between cash basis and accrual, and this would be for people who are determining their income and would need to know what that gross income is. A cash basis simply means that you count income and expenses based on the date that the money comes in or the date that the money goes out of the business. Whereas with accrual, you could accrue for income that you've not yet received, as well as accrual for expenses that you've not yet paid. In most instances, you're going to find that people use cash basis. The Presidential Campaign Fund is a voluntary contribution to the Presidential Campaign Fund. It does not change the refund amount that the client get or the taxpayer would receive. Due dates for taxes in the United States are April 15th, unless April 15th falls on a Saturday, Sunday, or a holiday. This year, it falls on a Saturday, and then Monday is actually a holiday, and so taxes will be due by Tuesday, April 18th, 2017. So the key ideas for this particular lesson is to understand the requirements to file a tax return, that they're usually determined by your age, your filing status, and your gross income. There are charts with the specific amounts available either at irs.gov or in the publication 17. If you can be claimed as a dependent on another's return, you may have to file even if you do not meet the gross income requirement for your age and filing status. Also, there are other conditions that would require you to file, such as over $400 in net earnings from self-employment or obtaining a premium tax credit through the healthcare marketplace. All of the information that's been presented in this particular course can be found in publication 17. If you have any questions about Freedom Financial Partners or myself, I'm Ginger Garvey, the Senior Partner. You can find that on our website, which can be located at www.freedomfinancialpartnersllc.com. Thank you so much for your time.